Hey all, I hope that you're doing well. Welcome at another video. In this video, we're going to discuss whether and how to invest in the cloud computing megatrend that we're seeing. It all started with this news, with this tweet that came out yesterday. It's about an analyst of Morgan Stanley that reported that he expects Google Cloud, the Google Cloud division, to grow by more than 50% in 2026. A growth of more than 50% in 1 year is of course huge. So let's go in depth in what is going on. Last week, Google reported their earnings, Q3 for 2025, early November. What do we see here? In this chart, we see the revenue growth for the Google Cloud division, Google Cloud Computing. We see clearly a strong trend moving up, right? But what do we see? We see an acceleration. It's actually moving faster than before, right? Last quarter, so Q3 2025, they reported a 35% growth year to year, so compared to 1 year before. These are huge numbers. We see the same trend in Amazon, also reported last week, early November 2025. We see that AWS, Amazon Web Service, the cloud division of Amazon, accelerate their growth to 20%. Like here, the blue line, you can find the percentages, the growth rate year over year. And in the red line, we can see the actually growth, right, in millions. It's also accelerating. At the same time, we see a clear trend. It's also discussed often throughout the whole year, 2025. It's a very big point of discussion. The capital expenditures. Capital expenditures are investments in infrastructure, in general the investment, but in this case in the infrastructure for cloud computing, for data centers for the future. We see unprecedented investments, and it's only expected to grow. They also announced that they're only going to increase their investments for the future. Why? Because they expect that it will pay out. So they're building now the data centers, they're building the infrastructure, and they clearly mentioned they expect that in the future it will pay itself out by customers using their services, using their data centers, using their cloud computing, and especially now with the AI catalyst, using their AI services. So in this video, we're going to discuss, of course, what is cloud computing, because it's important that we are on the same page, that we actually know what we're discussing. Then we're going to discuss the unstoppable secular megatrend of cloud computing, where we're coming from and where we're going to expect it. We're going to discuss the AI catalyst, because that's, of course, a game changer, right? The trend was already that a lot of companies and industries are bringing all their data and information to the cloud because it works more efficient. But now the AI catalyst is another motivator, because if it's on the cloud, and especially with a cloud computing provider that has the AI models, now also the AI models can be used on the data for more efficiency, for more productivity growth. And we're going to discuss that in a bit. Very important is also impenetrable moat, right? A moat is a competitive defense, like that other competitors cannot take very easily market share from the big players. Why? Because of course very, very expensive, right? To build the data centers, to make the investments. These big hyperscalers, they got the information, they got the resources, they got the money to invest, etc. And of course, also an irreversible enterprise transformation. As soon as enterprises are going to the cloud, it's very hard to take it off the cloud again. And that's what we're going to discuss. So let's start with a quick definition. Well, cloud computing is the delivery of computing services, including server, storage, database, etc., to bring it on the cloud. So, for example, when I was young, when I was doing my internship, the company where I did my internship for and also later, they had their own servers, like in the basement or like in a small closet, they had their own server. It was somebody constantly working on it, and every time there was an issue, somebody had to deal things. Now, cloud computing is when all these servers are rented from another company, right? So instead of having the servers for themselves, these companies, they can rent the service, and this is cloud computing, right? So all the information will simply be on rented infrastructure online. So what are the key characteristics? It's on-demand access, right? Whenever you want, you can get access to it, and you can buy more access, right? You pay as you go, you pay for your usage. It's very scalable, right? Because if you need more or you need less, you can just like rent more or rent less, and it's very accessible. Right? Instead of having to build your own systems in your own basement or like in a cluster or like in a separate room, you can just rent it from, and then you can put all your data from your company store there and work with it, right? So what do we see, right? We see a lot more increasing vertical use in healthcare, pharmaceutical, research, logistics, education. Why? Because it's simply more efficient. If a company, let's say you got like, for example, a school or like a pharmaceutical company or like a logistic company, and all your data about your staff, about your products, about your services, about your feedback, about your emails, etc., about your customer contact is all in one database from the top to the bottom, like all the meetings. If everything is simply one database, it's more efficient. Especially now when there's the AI tools, right? The AI catalyst, because now you can apply the AI models to all the data and it can give you clear insight, right? So the AI is able to combine all the data and give you very clear insight, right? And as also we're seeing that more and more, there are going to be more and more AI application, more and more AI tools, and there are going to be better ways of actually collecting the data, increasing the possibility of adding more data to it and more intelligence. It will increase productivity, right? So we're seeing already like an increasing vertical use of various sectors to the trend, and now it's only getting reinforced by the application of AI tools, right? There's like advanced AI tools and frameworks for machine learning and AI possible if you work through the cloud, especially with the big specialized cloud providers that have also AI models. So we see clearly the AI catalyst, right? Key growth drivers. Artificial intelligence, machine learning, we see generative AI, right? So the creation of images, the creating of documents, the creating of emails, etc., etc. And we see a lot of industry-specific solutions because you can imagine like healthcare or like a pharmaceutical company or a logistic company manufacturing, they all need their own customized adjustments, right? They're a little bit different. So that's what we're seeing right now. Let's take a look at the total market. Here we see a research from Precedence Research, and the cloud market here in 2025 was, according to them, 900 billion. And we see it only increase, right? It's really compounding, increasing a lot, right? To 2034, like 5,000 billion, like 5 trillion, and we're seeing steady growth. And in my vision, this also clearly what is happening, right? As we discussed, it's just simply the trend that companies are going to the cloud because it's more effective. It's going from a competitive advantage to a business necessity. Here we see the US cloud computing market size. Here we see the cloud computing market share by region in 2024, right? You see still the North American market is by far the biggest, and Europe, and then we see Asia, but by far it's North America is the biggest. And here we see the key drivers of the global data center capacity, both AI and non-AI workloads, right? You see also like increasing the AI workload, taking space, right? Really growing fast, like we discussed the AI catalyst, right? Because as we discussed before, imagine if you have a company and all your data is not only on the cloud, but you can apply all kind of machine learning and AI tools on all the data. It will make it so much more efficient, right? Because you can combine different departments with each other. You can combine product development, customer service, etc., etc. Here we see another research by Grand View Research. Also like it, 2025, 900 billion in revenue, and we're going to 2.4 trillion in 2030. And here we see like the various industries that are using it, right? Manufacturing, energy, utilities, government, healthcare, telecom, retail, etc. So what are we seeing, right? From Grand View Research. 2024, 750 billion more or less. 2025, 940. To 2030, 2.4 trillion, or like 2,400 billion. 2034, 5 trillion. It's a CAGR of 24%, right? So compound each year, it's growing by 20%. This is the cloud computing megatrend that's happening with the clear catalyst caused by the AI revolution. So let's go ahead to let's discuss a few points, right? So first one is like the explosive secular growth, right? We discussed there's that trend that it's simply a business necessity to go to the cloud, and that's also like what's getting confirmed by the market, right? We're seeing is really increasing. At the same time, we see the dominant market positions because the hyperscalers, they have the resources, they have the staff, they have the knowledge, they have the money to invest, right? Google is investing 24 billion in quarter 3 2025 only in capex, right? The capital expenditures, the investment. It's very hard to compete with it, right? It's called an impenetrable moat. What is the moat? That they have the competitive advantage, they get the resources, they get the money, they get the experience, etc. They get the processes. Also, we're seeing that clearly the profit margins, so how much money there's left from the revenue, from the money that comes in, the more money for the company, it's increasing. Why? Because there's scale increase. It's something called operating leverage, right? As soon as you're getting bigger in some circumstances, as soon as you're getting bigger, you can sell more without more investments, right? With relative wise, of course, you need more investments, but like the revenue can grow and grow and grow faster than you're growing the investments, right? So the profit margins are expanding, and as the scale increases. We see the AI megatrend catalyst, right? We're seeing that it drives unprecedented infrastructure spending. So it's not only that if you invest in it, that you're having your own ideas about it. It's actually these companies who are investing so much. They're investing a lot in the databases, in the infrastructure, in the chips. Why? Because they expect that it will pay out. They also say clearly, we expect that it pays out. At the same time, there's the irreversible business transformation. You can imagine once a company goes to the cloud, it's very hard to get back, right? To build your own servers again and go back. So it's really that enterprises don't really return to their old as soon as they go to the cloud computing, right? And this is also like an advantage for, it's a pro for investing, right? Because it's irreversible. At the same time, there's the oligopolistic market structure, right? Because of the big move, it's more like the few winners will take the most, right? Because they can scale up and they have the best resources, the best people, etc. It's very hard it's very hard now to start like a data center company, a cloud computing company to compete with the big ones. Well, we see multiple expansion opportunities, right, across industries, right? You can imagine like for pharmaceuticals, for schools, hospitals, it would be simply better for everyone to be on the cloud. Especially now we see way more AI applications. They should definitely be on the cloud, right? Because the AI models need to work with it. And we see clearly that there's proven management teams with track records of execution. So I want to ask you, can you envision a future where businesses use less cloud computing, less AI infrastructure, and less digital services? I don't see it, right? We're like in the middle of the fourth industrial revolution. And this is really like the AI revolution that will lead to a lot of increase in productivity, right? And it's hard to see us going back. We're seeing the implications everywhere already. So you're not betting on a trend, right? You're betting on investing in foundational infrastructure of the digital economy for the next 20, 30 years. Just like Google is investing almost 25 billion just in one quarter because they're building the foundational infrastructure. In case you invest in cloud computing, then you'll be investing in the same foundational infrastructure that will stay. So talking about the infrastructure investments, right? The CapEx, the capital expenditure, right? Or the investments from the big tech companies. Here we see the hyperscalers, Amazon, Microsoft, Google. They're really in an unprecedented capital expenditure. We see here 2025, it's research by Citigroup. They expect to have more or less 400 billion of investment in 25. Like throughout the year, the companies, the hyperscalers are actually sharing that they're investing more and more, right? We're going to discuss it in a bit as well. Next year, they expect more investments. Afterward, more investment, right? So the investments are actually going to increase and increase. There's an expectation of 56% CAGR, so compounded annual growth rate, the compounded growth over the growth. It's going to be 56% until 2029. A lot of investments. Why? Because they expect it's going to pay out. It's like the part of the investing in the infrastructure that will pay itself out eventually. This is something from the Alphabet, from the Google earnings from last week, Q3 2025. We see it really increasing, right? The capital expenditure. They're going up and up and up, as we discussed earlier. Here we see again this chart, right? There's the projected CapEx. It's only going up exponentially as well. Why? Because they expect it will pay itself off. With regard to the capital expenditures, Amazon, they projected to invest 125 billion just in 2025 in their capacity. And for 2026, they say like, hey, we're expanding it even more. So we're going to invest even more, right? We discussed. So it's not that there's like unprecedented investments right now and now it's over. No, they say we're going to invest even more, right? Like also what the other research firms mentioned. Microsoft, they increased in the Q3, they invest their CapEx with 74%. And for 2026, they expect that they're going to invest at least 94 billion in capital expenditure, but also like including capital leases, right? Because we see, for example, that they are also leasing the data centers from a company like Nebius, right? So that's more OPEX, operational expenditure, and not CAPEX, capital expenditure. It all started with Jeff Bezos, right? In the early 2000s. He started with cloud computing. Jeff Bezos is a big innovator. He also entrepreneured and found like the biggest online store, Amazon, of course, but he also started with cloud computing, right? In the beginning, there was like criticism. Is this really going to work? It's very risky what you're doing. But his vision was, one more time, very correct. So what is a hyperscaler? Right? Because Amazon is also a hyperscaler. It's a large-scale cloud computing provider that can rapidly expand its infrastructure to meet growing demands. These companies operate massive data centers with thousands of servers, scalable computing, storage, and networking servers. They have simply a lot of power because they're very big and they can invest a lot more. They get the experience, etc. The big three is the cloud computing market. They stay very big ahead, right? AWS is with 30%. By far the biggest cloud computing provider, right? Also Jeff Bezos, the founder of Amazon and AWS, started it. Second is Microsoft Azure. We're going to take a look at the subtle differences between these cloud computing companies in a bit, the hyperscalers. The third is Google Cloud, but Google Cloud is the fast growing. Also, we're going to discuss why they're the fast growing. Then we've got a bunch of smaller players, right? Alibaba, Oracle, IBM, Tencent. Salesforce is more like a software as a service, right? Because they really have software that they rent out through the cloud. And the other one are more cloud computing providers where companies can just put their whole information on. So we see like some smaller players, Alibaba, Oracle, IBM, Tencent, 2 to 4% market share. And we see the big ones, right? The big hyperscalers. Let's start with Amazon. They're clearly the market leader, right? 30% market share. There's like a lot of big enterprises working with them. They're by far the biggest, they have a dominant position, and they simply have very strong margins, and they're also increasing. Just like the earnings that came out last week, they're accelerating their growth and they're investing a lot because they think it will pay out. This is currently the chart of Amazon, right? We see this gap up into all-time high. This week we've seen another all-time high because of the acceleration in growth in cloud computing, in AWS, in their division. Second one, Microsoft Azure. This is really like good for enterprise software integration, right? Because they have GitHub, they have Microsoft Office. So it's often used by developers, right? Because they have co-pilots, AI co-pilots, they have the GitHub, the Microsoft Office. It's working more with them. Very fast growing. Currently, like Microsoft had a very strong rally early this year, right? We're seeing moving up and currently trading around $5.05. Then there's the Google Cloud Computing. What makes them different? Because they simply have the best AI models from the three hyperscalers, right? So 9 out of 10 top AI labs choose Google Cloud for the infrastructure because not only you can put your database there and all your information, but they have very strong AI models to work with it, right? So they're very strong in data analytics and AI and machine learning services. And they had their guidance to invest in 2025 85 billion. But they already increased it to 91, 93 billion this year, and they expect more significant increase in 2026. So that is what we're seeing right now. And Google also made a few all-time highs last week and still being strong. So here we see again the overview of the big market players in the cloud computing. We got a few other major tech, smaller players, but major players, but relatively small, 2.4%. Alibaba more dominant in Asia. IBM focused on enterprise, hybrid cloud solutions. And what do we mean by hybrid? Well, you can have a public cloud solution where everything is like on a storage outside the company. You can also have private, where it's like it's more for protection of data, right? It's also like probably more sovereign and countries will do it, where they really want to have like a separation of the data so they can do it completely private. That's like closed from everything else, like a database with all the information. And hybrid is like a mix between private and public cloud solutions. Well, there's the Oracle Cloud and the Tencent Cloud. Tencent is like a major player in China and in the gamer infrastructure. So if you're investing in cloud computing, where do you decide it, right? Because this is just an introduction. And if you really want to invest in it, right, you need to know a couple of things, right? Investing is something very, very complicated. It's very interesting, but you should understand the business completely, right? You should be able to read and understand the financials of the company. And third, you should know the market well enough that you form a vision about what you expect that will happen. If you don't do it, you should not invest in not one stock. You should just buy the ETF. You should buy the indexes, right? More than 90% of the retail investors, they should invest indexes. But if you want to take on the challenge, you need to understand everything of the business. Think as a business owner. You have to be able to read the financials of the company. And third, you need to be able to form a vision on the future. So let's say you decide to invest. You need to monitor potential warning signs, right? Because like I laid out my vision for the future, I also laid out the vision of what actually the hyperscalers themselves are saying and doing, and also what the reports from the investment the research agencies are saying. But potential warning signs could be like revenue growth deceleration, right? If the growth is really decelerating. Operating margin trends. If the margins are getting lowered, not a great sign. The customer counts going down. If the customer churn, right? Customers leaving. And competitive losses in key verticals, right? So that competitors standing up and that are taking over other complete client industries. With regard to time perspective, I think it's important to have at least 3 to 5 years for the full thesis to play out, right? In the short term, the markets are more emotional and things can change. But I think like 3 years is like very good, right? Because we expect the growth, right? The company is also investing a lot, capital expenditures. But in the short run, there could be volatility, right? Perhaps it's like another quarter of like actually revenue decelerating. But I think in 3 years, more or less, we have seen like growth. Also, we have way more information about the AI catalyst. I think there's way more clarity. I think the prices should have adjusted, right? I don't think it's like an industry where you want to be in like perhaps for 10, 15 years. Maybe yes, but it's something at least I cannot know, right? Because it's very much in the future and technology is changing. There's always the risk of technology disruption where technology is changing so fast that existing technology becomes obsolete and becomes out of date, right? So it's hard to look 10, 15 years in the future, but therefore I think you should keep monitoring it, but take at least 3 to 5 years for the thesis to play out, right? And then be flexible, review and perhaps rebalance. Well, also understand that tech stocks, they can really, if there's something bad happening, market turmoil, they can go down 30 to 50%. Right, even more, 55%. It's also happening in April this year, 2025, when there was the uncertainty of the tariff war and the Liberation Day, right? So expect volatility, right? These tech stocks are priced for strong future growth, but that also could hurt them in the short run if there's like a lot of uncertainty in the market, right? If you want to invest dollar cost averaging, like for example, weekly or monthly getting in, it's a good way to lower your risk, right? So because you're buying over a long amount of time, and you can also invest in cloud-focused ETFs, right? And it's very important to constantly review, constant monitoring, right? The most important thing I want to share you, don't start stock picking without actually knowing what you're doing. You need to understand the businesses, you need to be able to read the financials, and you need to form a vision about what you think that will happen. And then you need to keep on learning about everything that's happening in the market, right? You need to mature and you need to learn about everything. I hope you enjoyed this video. We discussed a lot, and it started with this report yesterday where the Morgan Stanley analyst mentioned that he expects 50% growth next year in Google Cloud Computing. We already seen last week in the Q3 2025 that the Google Cloud Computing is accelerated growth 35%. We've seen accelerated growth in Amazon. So hereby I shared the information about the cloud computing megatrend. Personally, I'm invested in it for quite some time already, and I'm really looking forward to all developments in this space. I hope you have a great day, a great evening and afternoon, and we see each other in the next video. Bye-bye.